Well, good afternoon, everybody, and welcome to our very first session here of Market Action. My name is Don Pratl, and with me is David Russell. As you may know, we are part of the TradeStation team here. I'm the Director of Trader Development and Education for TradeStation, and David Russell is the VP of Content Strategy at TradeStation. We hope to entertain you and provide you with some market activity, market action over things that have occurred today that we've been following. Remember, our presentation here is for educational purposes only. All the symbols, all the trading ideas, everything we discuss is going to be for demonstration purposes. They're not recommendations, just our observations. Now, this presentation is not an offer or a solicitation of any kind anywhere where a TradeStation affiliate is not authorized to do business, including but not limited to Hong Kong and Japan. Active trading is not suitable for everyone, so you should pay attention to your own stress level that you can live with as a trader, and pay attention to your suitability on the trades that you make. Options trading also carries a higher degree of risk. It may not be suitable for you as a trader. We've included in the chat panel a couple of pieces of important disclosure information regarding the characteristics and risks of standardized options and the other asset classes that we cover here at TradeStation. Now, if you are interested, and if you are in the Chicago area or planning on being in the Chicago area between July 30th and August 3rd, we have a deal for you. The TradeStation Masterclass. It will allow you to master TradeStation in just 1 week. Our colleague, Jesus Nava, that's him smiling on the page there, is one of the lead instructors here at TradeStation, along with our VP of Education, Mike Burke. And they'll conduct a 5-day seminar here in our Chicago office, where I'm located, and David is also located here as well. But if you're interested in any of these topics, go ahead and register now for the TradeStation Masterclass. We'd certainly like to meet you and spend time with you. So a couple of things that we want to touch on right away. You know, this morning during the morning market briefing, we talked about today being Amazon's Prime Day 2018, and right after that, right as Prime Day 2018 kicked off, well, the first thing that happened was Jeff Bezos became the richest person in modern history. But secondarily, the Amazon website crashed just as Prime Day 2018 picked up. And so we don't know how that will affect the actual outcome of the shopping, but I have a feeling that I'll still have a few white trucks circling my house before the day is out, as my wife and children stay at home to do their shopping during the summer. The Netflix also is a big loser today after their week subscription numbers were announced, and their quarterly earnings are reflecting that. David is going to probably mention that. But, you know, something before David takes off is I want to give him the very first Market Action trophy, the first time that we have run Market Action here at TradeStation. This morning during our morning market briefing, he called the 2795, 2797 level on the E-mini S&P, which is exactly where that bounced today. So kudos to David. David's trying to share his screen right now, and I heard that familiar jingle. So I'm going to turn things over to David so he can run through some of his thoughts on our Market Action webinar. David, where are you?
Well, thank you very much, Don. I'm right here, Don. Can everyone hear me?
I got you now, yep.
Excellent. All right, folks. Well, thank you for that, Don. Yeah, so this morning, we were looking at the E-mini. So right here, I have my TradeStation platform set up. I have my radar screen down the side. Now, hopefully most of you guys know, but if you don't, what I've done here is I've used my symbol linking. So basically, whatever symbol I click on the left in my radar screen will then jump up on these multiple different monitors here, these different charts. This is one of the great functions of many, many awesome things we have in the TradeStation platform. So now right here, I always have my S&P futures, one of my favorite things to look at. And this is a daily chart, but I kind of dug down into the hourly chart. And what I was looking at were some levels here kind of right around this low from back on Friday and around these highs here, and that's pretty much where we held. So anyway, the thing that I'm looking at right now, the first thing I want to do is point everyone's attention to on TradeStation. We go to the TradeStation website and you go up here in the very top to menu, and then you go to Market Insights. If you don't know where it is, this is the blog where we had a lot of information. I want to share a few things with everyone right off the bat. First of all, I'm going to be working with a summary that's right here, but I also want to let you know that we have a calendar, which is also down the page. So let's first of all go into the today's market action summary. We're going to be working off of this. Everything is going to be covered here in this blog, and then going forward, this will be something we will be able to review. We also have, if you click right here, the calendar. Now, this is a special calendar I want to share with everyone. What it does is it kind of includes all the economic news. I kind of use my judgment as to the stuff that's more important versus not, and those things are bolded as being important. Now, the other nice thing about this is when companies report in the pre-market, they're on the left, and when companies report after the bell, they're on the right. So this is just a calendar that's going to cover through the end of next week, and we're going to include this as part of our market action every week. So you go ahead and check every Monday. This will be on the blog. It'll be called the Market Action Calendar. So anyway, as we take a look now at where we stand in terms of the market, we have been talking about kind of this resistance level on the S&P around 2,800. What's interesting about this line is, let's go to the cash index now. You'll notice that the cash index is $SPX.X. There's just this line across here right around 2,800. And, this is a level that we fell at here, back in the middle of June. Now we're back up to it. We've been making higher lows. And then if you look at the same time, a lot of things have been lining up kind of bullishly, for the market here in terms of economic data. And then one of the other things I like to look at is just kind of the calendar. As you guys know, earnings is coming, and we're really going to see all those big events as they come up. So right now, attention is going to shift from the boogeyman of Trump tariffs and trade and all that stuff. Very likely, we're going to see attention shifting to earnings. There's an interesting thing as I was preparing for today's webinar. And so basically, I was looking at FactSet, which is, one of these FactSet is what it's called. It's one of these outside services that crunches numbers. So far, 109, as of Friday, 109 companies in the S&P 500 had issued some kind of guidance about Q2. 47 of the 109 were positive. Now, remember, usually forward guidance is bearish. You give a warning if it's bad, but usually proportionally the guidance that they're going to give guidance. What's interesting here is, according to FactSet, the best that we've ever seen for a quarter of positive earnings guidance is 53. So right now we're at a place where earnings guidance is looking pretty positive as we go into this earnings season. So these are the kind of backdrops and things that have been coming together. And Don, as you look at some of the economic news here, I mean, we've talked about a few different things here. Did you see this morning with like Bank of America or any of the economic numbers from the last week or two? Did you have any thoughts on any of those?
Well, the earnings for Bank of America were very good this morning, and that's on our list of. There's a few of those unusual activities. Some of the most active options were Bank of America options. Huge position was struck out in the July 29 calls, and also the July 29 and a half calls, the July 30 calls. They're all among the top and most active equity options that were traded today. So I would say that this is going to be very good for them as we move forward. The tax cuts helped out. They've made some changes internally, and they're obviously that's being reflected in the options trades.
Indeed. What stood out to me was the fact that they said that they were spending $500 million on technology investments, and they said that the tax cuts that were done, earlier in the year, was starting to trickle through. And what was interesting to me is also last week. And these are some of the things I mentioned this morning. A few of these things I mentioned this morning, but last week we saw surprise data from Gartner, which basically calculates stuff in the technology sector, we saw surprise data showing a growth in PCs. In terms of in the second quarter, there was a growth in PC shipments, which totally surprised to the upside. At the same time, we have Bank of America saying they're going to be spending more on technology. We see the tax cuts kicking in. Don, there's something else about the recent non-farm payrolls. Do you know that if you look at American computer factories, we had the biggest job growth since like the year 2000 in June? Did you know that?
Well, yeah, those numbers they show up in a number of places. The JOLTS numbers have been expanding. That is, job openings have been expanding, and the payrolls have also, or the unemployment numbers have been declining. So yeah, that doesn't surprise me a bit.
Incredible. I think it's interesting when we look at this because, we've been hearing about these trade wars forever. It's been going for a long time now. Don, when do you think it started? Was it in February or March?
Well, the president's comment about the trade wars were easy to win, that took a lot of traders by surprise. We don't, the market doesn't like uncertainty, and those tariffs, as they bounce back and forth, retaliatory tariffs that came into place after President Trump announced his tariff plans. I don't know the exact date. We'll have to check on that. Maybe somebody listening knows that date, and we'll be happy to share that when we see it. But it has provided unbelievable activity that has not been is not really being viewed as negative. In other words, who's afraid of trade wars? I would have to say right now, evidently the market isn't afraid of trade wars.
It just seems to me like it's the boy who cried wolf one time too many. What struck me was in the last week or two, we've seen some pretty big sort of people like Mohammed El-Arian basically saying the U.S. is winning the trade war. Jim Cramer made an interesting point that on July 10th, the United States threatened $200 billion of tariffs against China, or tariffs on $200 billion of their products. China did nothing in response. If anything, what China did in response was they allowed Tesla to come and build a factory without a joint venture partner, which has never happened before. So it's interesting as I look at some of the news, it trickles out overnight on the news wires from Beijing. Beijing is not aggressively devaluing their currency. They are encouraging their state propaganda media not to attack the United States. And there's even been articles about how China is now trying to woo more foreign investors. So it seems to me that it's just interesting how this seems to be winding down, and now attention might be shifting a little bit more to the positive impact of these of the tax cuts from earlier in the year. Another thing I thought was interesting, Don, was that if you look at what's happening now, if there's anything where the White House has been surprising people recently, it's been hammering down oil prices. Did you see this news this morning from the Treasury Department about Iran?
Correct. Yeah. You want to elaborate on that?
Yeah, so basically, the Treasury Secretary comes out and he says, you know what, we might not actually, have as strong sanctions against Iran as some people thought. A week or two before, President Trump was pressuring the Saudis to hammer down, energy prices and to have more oil production. So what we're seeing here is now, it's interesting that if you look at this environment, if I look at this, we basically have oil prices now getting squeezed lower. Last week, we had 3 inflation reports. We had the CPI on consumer, PPI, and then import prices. None of them showed runaway inflation. So right now, this is a little bit of, what they call a Goldilocks environment of, modest inflation, interest rates maybe not spiking higher, positive economic numbers. It seems like something of a very positive backdrop overall.
Well, oil prices did drop today. Well, as there's talk in the marketplace of a possible release of the global crude reserves. Data from the IMF showed a slowdown in global economic growth. The potential for U.S. waivers on Iran oil sanctions pushed prices for global benchmark Brent to their lowest finish in 3 months. So, that's all helpful for us in the U.S., it seems as though the world is having, or global markets may be having more trouble, sorting things out right now. We have pretty much just plugged, in the U.S., traders have put their heads down and kept their eyes on the numbers and the facts. Preston has a question about the trade war. What would we see if the trade wars started to have a negative effect? What would be your canary in the coal mine, Dave?
It would be for me at this point a very clear sense of significant companies somehow cutting guidance would be one thing we would look for. And we would also look for evidence of it coming through in some of the economic numbers. Like, for example, we saw a little bit in the consumer sentiment, people concerned about trade wars, but don't forget the media has made a big deal of this. So, people see something and then they say, well, I'm kind of worried about it, but I'm still going to buy, a new car. I'm still going to spend $2,000 on a couch that I've been putting off. So at this point, it would have to be something that would, in my view, actually impact investment, which we're seeing the opposite. It would have to be something where companies, a significant number of companies, gave concrete numbers. Everything has been vague. It's been, we're worried about the trade wars, but at the same time, we're increasing investment. So to me, it would have to be something like that to really, be something that's convincing. And honestly, it's not really clear because we have not really seen something like this in modern history. So I think, from my point of view, I would look for things like that. And if anything, the idea was that it would undermine confidence, it would discourage business investment, and we've seen just the opposite in terms of most of the data that we've seen. Okay, so I want to also just mention here, I want to show people how I've set up my radar screen because I've been using it a little bit. Like here we have Brent crude, but I have my WTI crude is with CL. You can just click on it over here and then it pops up over here to the right. But what's interesting is I want to show this to people because I find this a very useful sort of way to set things up. I have a 1-day return, a 5-day return, like a weekly return, and a 21-day or a monthly return. That's 21 sessions. I also have a little indicator I've created that shows me how close something is to its 52-week high. This basically lets you see, are these pushing highs? Like you see technology and the XLY, consumer discretionaries, those are pushing highs. Then you have things like financials, which are well off their highs. It's a very quick way to zip through and kind of have a sense of where's the strength now and where has the strength been. I set this up in a way also where basically you can dig in and you can look at all these different Dow Jones indexes that basically show 150 different companies, and then you can kind of rank them to see where the strength is over the last week or the last month. I want to just emphasize this because there's so many great things we can do with Radar Screen, and some people have asked for access to my workspaces, which I can share this with people if anyone is interested. If you email me, my email is drussell@tradestation.com. Okay, now one of the things I wanted to mention because I was looking at some of the different things out there was as we go back and look at this, we can see energy just took a beating today because of this news. In terms of, Iran, which was negative. But what I think is interesting, I want to just mention this. I like to kind of look at groups, over time, and I like to look at big industry kind of groups. And one that's been very interesting to me has been the oil refiners. One stock that I'm particularly interested in and looking at is HollyFrontier. This company was recently added to the S&P 500. It's had a very strong sort of uptrend. And I just think it's interesting here to see that a stock like this was up today when the energy sector was down more than 1%. The refiners have been outperforming the energy sector. They were making new highs even when energy was still chopping around back in the late winter. So I think it's interesting to take a look at some of these. I want to look at some of the other things that have been happening recently. If we look on the different things that have been on the blog recently. One of the big stories that I want to emphasize to people are some of the recent initial public offerings. We are in a very interesting environment for initial public offerings. So if you look on Market Action, Market Insights, we basically have categories down the side. One of them is IPOs. This is the last IPO story we did. We kind of reminded people, hey, wait a second. Some of these recent IPOs, they had an explosive rally in May and June. Now they're stabilizing. Now they're kind of consolidating. One in particular that I think is very interesting. First, we have to talk about the giant 9 million pound gorilla in the room, which is Netflix getting just destroyed after the close here. Netflix came out, they had bad subscriber guidance, or bad subscriber growth. Stock got crushed. It has been on fire for a long time. But what's interesting is there is a Chinese stock called IQ, which is the Netflix of China. It had a monster run a while back. Now it crashed, and now it's starting to stabilize and move higher. It had a good day today. I think it was up like 10% today. And then it's down a little bit with the Netflix news now because Netflix is down about 13%. So I did want to emphasize that and just emphasize the fact that we did a story recently about some of the strength in the initial public offerings. And the fact is that we saw some real money shifting to initial public offerings. We did a story back in June. But basically, this is an area now we are seeing the volumes. We're seeing the performance. There was a point in time when a company went public and it just got crushed. And now we're seeing the opposite. So some of these IPOs have been pulling back. Look at a stock like Dropbox, same way. So I want to just emphasize this because as we kind of look for the areas where money could kind of shift and gravitate over time, this is an area that has really started to come together. And you want to add something else. Look at last week. We had Broadcom buy CA, which is really weird. It's kind of like McDonald's buying IBM or something, saying, hey, we can have synergies on something. But the fact is that it was a weird acquisition. Nobody thought it was a good move for Broadcom. But what's interesting about it is that it kind of creates this idea, and I've seen a lot of commentary on this building. JP Morgan put out a note on this recently. JP Morgan said that, or was an interview with their head of M&A. He said you're going to start to see companies trying to buy growth. And so what I think is interesting is you look at some of these initial public offerings, these are, kind of mid-cap companies, you're looking for now the potential for, a lot of these things are coming together for a potential sort of upside in terms of M&A, in terms of people looking for the exciting new kind of growth areas, new tech stocks. It's a favorable backdrop for initial public offerings. Take a look at some of the options activity, Don. Did you see what happened today in Target?
Now my mic was off. No, what did happen in Target? Let's take a look. Oh, there was that July 70, January 72.5 call roll.
Exactly.
Yeah.
What was interesting about this is now Target, someone apparently bought some calls in Target. Let's take a look at the chart here. Stock's been moving higher, and
Dave, why
these
don't you
people
blow
were
that?
apparently long.
Expand your screen, Dave, so that we can see it clearly.
Okay, let me just do this and just show this screen now. I don't want to take time right now to relaunch TradeStation, so I'll just go out some of these charts that we have on the blog. But what's interesting is, TradeStation's had Target's had a decent run up here. You see the 50-day moving average. And what's interesting about this is they were long the $70 calls right here that expire on Friday. And, so they're basically long the calls right at this level where my mouse is. So then they exited that position and they went all the way out to January and they bought the $72.50 calls. So Don, this is in the money call buying. What do you think about that?
Well, I don't know what to make of it in that size. They're a very short expiration, right? So they're looking for a rally. We know that, but
so it lets them control. What is it? 1.2 million, right?
Yeah,
about
right.
About 1.2 million shares,
right,
for a fraction of the cost.
It's the thing about options,
And,
that we still are explaining options after all these years of it being a useful product. People think it's so complicated. I mean, the amount of leverage that you get from an option trade like this is really simply amazing. And I'm glad you pointed that out as an old former floor broker at the CBOE. That is how we made our living, buying those cheap options. There's a persistent question in the that I want to try to. I'm trying to bring up the matrix. We did a webinar last week with one of our other education partners, Fausto Puglisi, and if you'd like to take a look at the his webinar on the matrix. I'll drop that link in the chat panel. That's not exactly where David's direction is right now, but because we're off the screen, we're off the out of the trading platform at the present time. But yeah, well, there you go. Thanks.
Okay, excellent. And Don, is that link right now, folks? Don't forget, you can always see a lot of our past webinars if you go to TradeStation University. You go up here to the menu, click on University, and then you're going to see a lot of the previous webinars that were along here, the most recent content. I would bet if you went along here, you might find Fausto's webinar. So
yeah.
all this
Actually,
stuff is super accessible.
Our super intern down in the Florida office, our good buddy Nico Gonzalez, has posted the link to that for us. So we're getting all the team involved here today. It's awesome. Thank you.
Excellent. There's another trade last week that was interesting. 21st Century Fox. There's been talking about merger acquisition. Don, they were selling puts. They were selling upside calls. They were buying calls that were near the money. What do you this was an interesting one. Do you have any, did you have a chance to take a look at this?
Yeah,
trade?
that's somebody that really wants the stock. Let's face it. Selling a put is a good way to acquire stock. That call spread is, a bull call spread. So, this is a really aggressive position. Do we have any name on that trade? Was this obviously wasn't one of the, it could have been one of the acquiring parties, warring parties in that merger fight, but we don't really hear the rumors as we used to. What do you think on that? I'm not sure what I make of it. I can see, certainly we can see it's a huge, it has big risk as well. So this is someone with enormously deep pockets.
Absolutely. This controls 3.5 million shares of 21st Century Fox. Basically, they're willing to own it under 46. If it goes to 50, they want to really hit a home run. But I mean, if it goes to 40, if it goes to 30, they're long at 46. So this is someone who wants to own the stock. And here's the interesting thing. Now, when we look at some of these big institutional trades that we're going to be covering on the blog, the thing about them is it allows us to learn from people. We're not saying that you want to follow things like this, but it allows you to see what really big people are doing. This is not theoretical. These are real trades. We have the ability to dig in and really see the trades that are happening. We can see what's bought and what's sold. We can see the size. The thing I love about this is we can see what people are thinking. We can see both the where in terms of price, and we can see the when in terms of August. So they're looking for August. They're saying 46 is my line in the sand. And they're also saying, we see the potential to leverage this. So it's just very interesting to see how people can combine, put selling and upside call buying. And I just think that's one of the things that stood out to me. Some of the other ones that were interesting to me in particular, we don't have that much time left. What was interesting is Norfolk Southern. We have talked about on and off just the strength in rail transport. I think that's an interesting trend overall. And there was a bullish vertical spread in Norfolk Southern recently that was targeting the earnings date, and that's also here on the blog. So I did want to emphasize that to people. Let me see if there's any other things that we wanted to.
One thing. If
you look, remember, folks.
One thing all the listeners should realize: David is a huge fan of that segment. He's written a number of rather insightful pieces about the rail industries. And if you had any interest at all, go back through the archive of our presentations on the blog.
Well, thanks, Anya. We talked about it this morning, and for me, I like it because it comes out every week, and it's a forward-looking indicator of the economy. It's one of the most, accessible things to look at. Well, very good. So let's see. I wanted to just also remind folks that we do have. If you look, this. I'm not going to be able to cover everything right now, but it's all here. There's a summary. I did want to just emphasize that there have been the industrial things. I highlight a few more little details there to look at. And I want to just kind of emphasize, we look at the calendar going forward, let's just take a quick look at some of the things that we really want to be careful of. Tomorrow and Wednesday, Jerome Powell is going to be in on Capitol Hill. He's going to be doing that testimony that he I think he does it twice a year. And there's going to be a little bit of a focus. By the way, I do think that could reduce the importance of the beige book because we're going to be so tired of the Fed by the time the beige book comes out on Wednesday afternoon. But we do have some housing, to think about this week. We have the housing index tomorrow morning. Then we have housing starts and building permits on Wednesday. And then, as we get into the following week, it's going to be even a bigger sort of, we can see here on the 23rd, it's going to be an even heavier dose of earnings. And then there's also going to be the ECB is on the 26th. I know it's far enough off, but I like to kind of think by weeks. And right now it's going to be housing. Then the following week, it's going to be some big earnings and some economics, the ECB and the first estimate of second quarter GDP. And the week after that, Apple earnings and a whole ton of tech earnings are going to be that following week. So just want to help everyone kind of just have a sense of what's going to be coming up. Don, were there any other questions you wanted that we should
Dave,
jump to before we go?
You mentioned about Chairman Powell's comments tomorrow, kind of overshadowing the beige book. I mean, his comments of late, and he has been very outgoing as far as Fed chair has in recent history. He's talking. He's very upbeat about the jobs market and the outlook for on-target inflation. His views on government spending and the ongoing tariff battles are still unfolding. So he's that's the kind of thing that we have to take a look at tomorrow. He'll look for hints along those lines from those comments. He's, as you mentioned, this is going to be a semi-annual monetary policy testimony before the Senate Banking Committee, but he's also got a regular calendar of speaking engagements that we try to include every time that we see him on somebody's calendar in the notebook announcements every day. So if you're concerned about, if you're a Fed watcher, I'll try to include those items for you every day to let you know what's going on.
Awesome. Now remember, folks, all of Don's, he does a ton of work. It's awesome. I look at them all the time, and they are on the blog just under Don's notebook every morning. We've got these categories down the left side to help you kind of navigate and find things. Also want to remind everyone, Don, what's happening in Chicago at the end of July?
Oh, one more time, our master class, of course. As we mentioned, our rock star Jesus Nava there, the smiling face, is the lead instructor, the director of education and the lead instructor, along with Mike Burke, the VP of education. They handle the master class in Florida. They ran 2 sessions so far this year. They are coming to Chicago at the end of the month. And we're expecting a big crowd. We hope that anybody that wants to attend the master class, that they let us know as quickly as possible. You will be able to master the TradeStation platform at the end of the master class. We know that. And there's the link in the chat panel right there for the TradeStation promotional master class. Thank you, Nico.
Terrific. Well, thanks, everyone. We're going to be doing this every Monday afternoon. Remember, I'm at drussell@tradestation.com. Don is at Pratl, TradeStation.com. Look forward to talking to everyone. And don't forget to check out the blog every day. There'll be lots of new content going up there. Thanks a lot, folks.